Hi, welcome to the short video tutorial on the Samco Risk Advisor. The Samco Risk Advisor is a tool to help investors manage their risk a lot better, and it is designed on the basis of the best investment practices by some of the world's most legendary investors, whether it may be Warren Buffett or Peter Lynch. In order to access the Samco Risk Advisor, go to the Samco Resources and Samco Risk Advisor option in your Samco Star back office. On clicking the same, you shall be able to see your holdings and your portfolio. Along with your portfolio, you will be able to see certain red flags that may be raised based on the composition of your portfolio. Peter Lynch once said that owning stocks is like having children. Don't get involved in more than you can handle. The same way, Samco Risk Advisor helps you identify if your portfolio is over diversified and has more than 20 securities in the portfolio. This is a red flag that you are over diversified, and your portfolio may do well if you reduced the number of stocks in your portfolio to a more optimal level. Same way, some of the world's greatest investors have said that putting all your eggs in one basket can be disastrous. Hence, the Samco Risk Advisor mines data to help you identify single stock overexposure and extreme concentration in your portfolio. It may not be a good practice to have an extremely concentrated portfolio with less than 5 stocks, or to have more than 15% of your total portfolio invested in a single asset. The Samco Risk Advisor raises these two as a red flag, which are the single stock overexposure and also the concentration of a portfolio in case the number of securities in your portfolio is less than 5. Why is single stock overexposure such a bad thing? Let's say you are invested completely in one stock and a regulatory hassle or a technical issue or any such risk were to derail the fundamentals of the business of the company, it would result in severe wealth destruction. Hence, a reasonably well diversified portfolio may be suitable for every investor. Just the way single stock overexposure is not advisable, the same way sectoral overexposure is not advisable. So let's say this is a sample portfolio with oil and gas exposure of 75%. This means that the portfolio will be at the mercy of the oil and gas sector, and any adverse impact in crude prices will have a tremendous impact on the portfolio. Hence, it may serve well for every investor to limit their exposure in a particular sector to 35%. The Samco Risk Advisor, it raises a red flag for any sectoral exposure exceeding 35%. More wealth has been destroyed in trading penny stocks and poor rated stocks than any other thing. There are multiple reasons for the same. One, the lack of fundamentals of these penny stocks, very poor liquidity as far as the stocks are concerned, and they are extremely susceptible to all operators' dump and pump operations. Hence, in order to save yourself and the portfolio from wealth destruction due to penny and poor rated stocks, the Samco Risk Advisor raises a red flag for penny and poor rated stocks in case they exceed more than 10% of your portfolio. Stocks with a penny or poor rating, as per the Samco stock ratings, are businesses with poor corporate governance, poor business fundamentals, and extremely risky. At Samco, we have rated over 1200 listed stocks on the NSE and the BSE. However, there may have been certain stocks which may not have been rated. In such cases, we raise a red flag for not rated stocks, whereby in case your holdings in unrated stocks exceed 10%, we would recommend investors to do extensive research and understand the businesses invested in a lot better. Thank you for your time for viewing this short video tutorial on the Samco Risk Advisor, which will help you understand the risks of your portfolio, whether they may be concentration, over diversification, investment in penny or poor rated stocks, sectoral overexposure, or single stock overexposure, or investment in unresearched or not rated stocks. Thank you.